Well, actually, the markets are still in a vacuum. We've got 2 trading days, 2 holidays, and now we've got bits and pieces of, cues from the global market. The Asian markets at the moment are trading a little lower. Japan is not trading, incidentally. The holiday continues. But for the Australian shares, Kospi shares, the Chinese shares are all trading marginally lower. I think a talking point could be the dollar index. The dollar index is now fallen to 96. Normally, a weak dollar indicates weak economy, and initially it is a little negative for emerging markets. It becomes a positive later on. We'll have to see if it means rupee strength. That will have some bit of negative impact on some parts of the economy. I think the bigger negative perhaps that the Indian markets will take note of is the auto sales. It wasn't just Maruti. Across the board, whether it was Tata Motors or Eicher, the numbers have disappointed. The positive will come from the MSME SOPs.
Yes.
That would definitely be a relief to a large section of the economy. This is coming on top of the 59-minute loan. So that part, an economy that is not in the listed stocks, that part could do better, and the market may take that positively. But for listed stocks, the numbers that have come so far are not looking very exhilarating.
I'm going to, Lata, good morning. I'm going to come back to the MSME SOPs in a bit, whether that is sort of the RBI relaxing its extremely prudent stance or whether it's the need of the hour. We'll talk about that in just a moment. Good morning, Anuj. But yeah, I take your point. Global markets are gradually coming out of the party mode, getting back to work. So just one data point from China. We're talking for a lot of the slowdown talk, and the Caixin PMI numbers are in, and that's not a good picture. Just like the state numbers, even then this is a private sector survey, there's contraction in the Chinese economy at about 49.7 versus 50 plus in November. The other thing is the hope is still floating around, love between the US and China, because after the phone call, there were more statements yesterday from Xi Jinping, and he said that history says that cooperation is the best way forward. So platitudes, at least, on the face of it, things are still okay. So that part of hope is still floating. Japan, of course, is shut, as Lata pointed out. But, Anuj, the question is, where does this leave us? Yesterday, we had this little residual Christmas or whatever New Year party rally, completely crazy last 1 hour move. And you were saying that let's not get ahead of ourselves, let's not extrapolate.
Yes.
Now, this morning, the queues, GST collections, the kind of auto sales numbers that we've had, all of it is a little more sobering and tempering. So how would you look at the morning?
Morning, Surabhi. Let's wait for market's verdict. I think as simple as that. The point I made yesterday as well, and I think I repeatedly said this when the market was closing, that don't extrapolate the last hour move. That move was pretty much meaningless. You should have perhaps participated in that move through the day intraday at 2:30, and the market gave you that sign. But you should have closed your position by yesterday, and then see how things move. And if the market opens higher, which right now looks unlikely, then there's no place to take fresh longs. HDFC Twins accounted for 66% of market's last hour rally yesterday. So it was a bit narrow.
It was a bit of an index management.
Just the fact that there was low volume trade. Even the NSE did not have the bhav copy, so when the rates at times were not updating. So it was a bit of a casino out there. The auto sales number, I think, will have an impact. That's a muted number, and the market was not expecting this kind of muted number. Eicher, for example, for me, really is a bit of a howler. Yesterday in closing bell, perhaps, we thought Eicher was seeing some short covering. And, in fact, I had made this point that, Eicher is seeing short covering after the CV sales numbers. But the Royal Enfield numbers really are very disappointing, and that will have an impact on the stock. Not just stock, the auto sales numbers move the market's needle. So that's why it's important. And the market is long. It lacks triggers. Having said that, the texture of the market has been buy on dips. So if you get a dip, and a significant one, then perhaps, say if we move towards 10,800, 807 has been the low for last 2 days. If we move around, say 10,850, 840, then perhaps you want to try along with a stop loss of around 10,800 thereabout. Otherwise, in the morning, my sense is smart money may try to short the Nifty with a stop loss of 11,000. That may happen. But let's wait for the market's verdict. I think today we'll have an important verdict from the market on what the next direction for the market is. Today, the volume should also be quite normal because the Asian markets are also back now.
Yeah, take your point, Anuj, and I think this 10,950, as you've been saying, I think 8 times you counted it. 8 times
it's gone there.
Just proving to be such a jinx of a level. Now, let's see how that plays out. Take your point on Eicher as well. And by the way, this time there's no shutdown at the Orgadum plant. There was no one-off in this month, and yet the Royal Enfield numbers are so weak. But Lata, before we kick things off, a point on the MSME relaxation that came in from the RBI and how you read it.
No, I'm reading it as part of a government move to stimulate the economy. So that way it has to be read positively. Immediately, of course, the MSMEs needed this SOP 1 year earlier. Post-demo, it was an unfair blow to that community which depended on cash. It's come a year too late, but it is still a SOP. The real advantage will not be for MSMEs because they've already died. The ones that were affected by demonetization, they did get a little bit of SOP from RBI at that time. They were allowed to be standard for 6 months, even if they defaulted. But it was not enough, clearly. They needed a lot of prop at that time, post-demo, and then immediately the GST blues also started coming in. I mean, if you're not part of the formal economy, you can't do business with a whole lot of formal economy participants. So this help was needed for MSMEs, but it's probably come a little too late. The biggest advantage is not for MSMEs, but for banks.
For the banks.
Banks' total exposure, I couldn't get the number yesterday. I tried a lot. But I think the best guess I was given was that for MSME loans under 25 crore, the exposure could be between 10 and 15 lakh crore, between 10 to 15%. And if you take that, the MSME NPAs run at about 11% of the universe. So, 10% of that, 1 lakh crore less NPAs for the system to contend
That's
with.
why I worry. I hope this is not putting a band-aid over a wound that will start festering at some point.
The deed is done and it will happen. I mean, all restructuring and munificence is like that. You're kicking the can down. But my only point is that in this case, the can should have been kicked last year. It has been kicked now for what it is worth. I'm more worried about the 59-minute loan. The 59-minute loan, not all the loans given are being sanctioned by the banks, which is good.
Yes.
They have to, after the data they get from the software, they will leg it out, see whether that land and inventory exists. Uday Kotak warned that small loans are, we are not doing a proper check on the inventory, receivables, cash positions. So, that part is already a worrisome part. You're going to give them a loan in 59 minutes. As well, you've got his MSME SOPs. Let us look at the positives. It is very good for a large section of the economy. It's a bit of a relief for them. And, the PM statement yesterday was against farm loan waivers, but it was very strongly for some help for the farmers. So probably we can still expect in the vote on account something by way of a farm income.
Basic income.
Yeah, exactly. It was very clear that waiver is not the way out because many of the small farmers are dependent on money lenders, on sahukars, as the bite we played out. But something is coming. So if you put all that together, actually it'll be good for the economy. So my point is that the listed stocks are doing badly because of, you can see the first clean number you get are the auto sales number. But I think the broader, the non-listed economy is getting a lot of stimulus by way of regulatory munificence as well as probably some kind of a package coming at some point in time, which will be... So, banks, consumer stocks, all of them are actually going to be advantaged by this. There will be other discretionaries which are not advantaged because consumption quite clearly has dried up at higher levels.
But there seems to be definitely more money being pumped into the rural channel. All right, on that note, let's kick things off and take a look at what the wise experts have to say as we get into trade this morning. Dhirendra Tiwari of Antique Stockbroking says the outlook for 2019 will be shaped by the earnings trajectory, which, though not particularly weak, remains susceptible to downgrades in the banking sector. He says in 2019, markets are likely to be volatile with multiple global and local events, the most important being the general elections in May and further noise around the global trade war issue. However, he believes that policy formulation, irrespective of the formation in power, has become more predictable and thrust towards infrastructure, housing and roads is unlikely to see a cutback. Dhirendra says their Nifty year-end target for 2019 is 12,250 based on an FY21 EPS of 720 on the Nifty. Their topics include TCS, HDFC Bank, SBI, ICICI Bank, L&T, Hindalco, Marico, Dr. Reddy's, UPL and Siemens.
Okay, well, some more opinion coming your way. It's the first proper trading day of January, and so we could do with more opinion. Mahesh Nandurkar of CLSA says GST collections during December 2018 were down 3% month on month in line with seasonality. He says at 968 billion rupees a month for 9 months, FY19 GST has missed government budget estimates of 1.12 trillion, with the central government bearing the bulk of the shortfall. He estimates an overall GST miss of 1.8 trillion or 1% of GDP. Mahesh adds the recent GST Council moves remain focused on rationalization of taxes, which implies that the situation will not improve well into 2019, and that too when a new government might choose to implement tougher compliance moves. As such, he says the recent bond market cool-off could prove temporary or dependent on RBI OMOs, and yield volatility is the way ahead in 2019. Well, just for the immediate point, let me say that the fact that the GST collections are way below target may not affect the bond markets much, exactly for the reason that Mahesh is saying. RBI is buying. I mean, a huge amount of RBI buying, and therefore they may not feel the pinch. They will feel it later on in the year.
Okay, well, right now there's a liquidity push coming in from the central bank. Actually, speaking of that, let's get you some money market calls for the day as well. Pramit Brahmbhatt of Veracity says the rupee appreciated yesterday and a technical correction is possible today. He is expecting the spot USD INR pair to trade in a range of 69.50 to 69.70.
All right, and on bonds, Dhaval Dalal of Edelweiss says the 10-year benchmark bond yield has hardened, and this may be attributed to fears of fiscal slippage amid lower than expected GST collection, profit booking by traders, as well as positions adjustment ahead of the new 10-year benchmark issuance in the near term. He adds the chart pattern of the 10-year yield is looking weak from a technical perspective as well, despite stable FX, FPI inflows and further decline in 10-year US Treasury yields. He expects the 10-year benchmark bond yield to consolidate between 7.4 and 7.5 in the near term. Suggests buying at this dip in this range.
Okay, of course, the US market were not trading overnight, and in Asia also we have a couple of markets closed, but here's Mangalam with the world view.
Well, we've spoken about it ad nauseum. So just to put a finality to this, yesterday these were the markets which weren't trading, the Wall Street, Europe, and today it's the Nikkei which isn't trading. But we still have a fair amount of cues coming in from the globe. The most important one being the dollar index now retreating to levels of 96.1. So a weak note, a weak start for 2019 for the dollar index. Let's keep an eye out on that. For us, the bigger positive is that crude is still contained around that $53.5, $54 per barrel mark. So that is a positive. However, most of the Asian markets which are trading, which is the Shanghai Hang Seng Straits as well as the Taiwanese indices, all of them have come off their morning highs, currently trading at the lows of the day. The Hang Seng, in fact, is down about 750 points. And the SGX Nifty, that one should come up for you, currently trading at 10,915. And if you compare it to the futures close yesterday, 10,961 thereabouts, then it's a much deeper cut than what it optically looks. 7 points is what compares to previous day's close. And if you compare it to yesterday Nifty futures close, it is lower by about 60 points.
Okay. All right, Mangalam, thanks very much for that. Well, with that, let's get back to the big headline that we were just discussing, that interview that Prime Minister Narendra Modi gave out yesterday. It's been less than 100 days before the Lok Sabha elections. In a 95-minute long interview to news agency ANI, Prime Minister Modi says that farm loan waivers are political stunts, don't benefit majority of the farmers. He also spoke on the resignation of the former RBI Governor Urjit Patel, saying that Patel wanted to leave 6 to 7 months ago for personal reasons. Here's more.
स्वयं गवर्नर साहब ने रिक्वेस्ट की अपने निजी कारणों से, और मैं पहली बार आपको बताता हूँ, वे 6 महीने से मुझे लगातार कह रहे थे, लिखित में भी कहा था, व्यक्तिगत रूप से उन्होंने मुझे लिख करके भेजा था।
पॉलिटिकल प्रेशर नहीं,
सवाल ही नहीं उठता है जी, सवाल ही नहीं उठता है। और मैं मानता हूँ कि आरबीआई गवर्नर श्रीमान उर्जित पटेल ने अच्छा काम किया है। अगर कर्ज माफी से किसान का जीवन मुक्त होता है, मदद होती है, तो बिल्कुल करना चाहिए। लेकिन क्या हुआ है, इस देश में पहले भी सरकारों ने, देवीलाल जी के जमाने में भी कर्ज माफी की थी, 2008-9 के चुनाव जीतने के लिए भी कर्ज माफी की गई थी। बार बार कर्ज माफी करने के बाद भी ऐसी क्या कमी है व्यवस्था में कि किसान कर्जदार बन जाता है और सरकार को चुनाव और कर्ज माफी का कार्य चलाना चलता है। तो उपाय ये है कि किसान को मजबूत बनाना, एम्पावर करना। इतनी बड़ा परिवर्तन लाते हैं, टेक्नोलॉजी ड्रिवन है, तो बहुत से छोटे व्यापारियों को थोड़ा अनकंफर्ट हुआ है और ये तो हम भी मानते हैं कि थोड़ा तो अनकंफर्ट हुआ है। लेकिन सरकार की जिम्मेवारी क्या है कि संवेदनशीलता के साथ उनको समझे, उसकी समस्या का समाधान करे। तो ऐसी जितनी बातें हमारे सामने आती हैं हम जीएसटी काउंसिल में रखते हैं। जीएसटी काउंसिल उसका सरलीकरण में हम मिल बैठ करके आगे बढ़ते हैं। अभी हमने 2 महत्वपूर्ण फैसले करना हम चाहते थे कि एक, जो 20 लाख रुपये तक की जिम्मेवारी हमारे व्यापारियों को है, उसकी सीमा हम 75 लाख कर करके उनको मुक्ति देना चाहते थे। लेकिन इस जीएसटी काउंसिल में हम नहीं कर पाए, कुछ रिजर्वेशन थे कुछ स्टेट के, तो आखिर के एक कमेटी बनानी पड़ी। कमेटी का निर्णय आ जाएगा तो मैं मानता हूँ एक बहुत बड़ा काम हमारे लोगों का हो जाएगा। हमारे देश में बार बार खबरें आती थी काला धन, और कोई इस बात से इनकार नहीं करता है कि देश में पैरेलल इकोनॉमी चल रही थी, इसका कोई इनकार नहीं कर सकता। उद्योगपतियों के घर से, व्यापारियों के घर से, बाबुओं के घर से बिस्तर के नीचे से नोटें मिलती थी, बोरे भर भर के पड़ी हुई नोटें मिलती थी। ये सारी चीज़ें इस बात का द्योतक है कि हमारे देश में फॉर्मल इकोनॉमी की बहुत अनिवार्यता थी। ये पैरेलल जो इकोनॉमी थी, इसने देश को एक प्रकार से भीतर से खोखला कर दिया था। नोटबंदी ने सबसे बड़ा काम किया है और जो आने वाले दिनों में देश को बहुत ही मजबूती, आर्थिक रूप से मजबूती देने वाला है, और वो है ये जो बोरे भर भर करके नोटें पड़ी रहती थी, वो बैंकिंग व्यवस्था में आई है।